Now is Walser Wealth Management President Rebecca Walser and Aptus Capital Advisors Portfolio Manager David Wagner. Great to see you both. Thank you so much for being here. David, kicking things off with you with some reaction to these earnings. You know, I think J.P. Morgan set such a high bar 2 weeks ago. And right now it's looking like things have turned decidedly mixed to down in terms of the numbers and the guidance. Your reaction?
Yeah, you know, Maria, I've continued to hear this earnings slowdown mantra for about 10 months now, and yet investors really haven't seen it. I mean, earnings expectations for the S&P 500 have come down about 10 to 12% from $253 back in July of last year. But, you know, I think the big question right now from a lot of investors right now is, will this finally be the quarter in which the rug is actually going to get pulled out from underneath the earnings expectations? And Maria, right now, I'd actually argue not just yet. I mean, typically analysts, they only guide one quarter out at a time. And that's why we've started to see slower revisions to expectations so far in this cycle. And truth be told, that's actually exactly what happened during the great financial crisis back in 2008. So far, you know, first quarter expectations have already come down 6%. That's above its historical average of about 4%. But the macro indicators, as you were just alluded to, for the first 2 months of this quarter, well, they were pretty strong, and they really didn't start to weaken until you had the mini banking crisis basically in the middle of March. So I do think that Q1 earnings may be a little bit more insulated, than very much what was anticipated by the market so far.
So have we seen the best then for the first quarter? Should we be selling into any rally here?
You know, the market has rallied basically into every earnings season for the last 3 times. And I think we might have gotten that earnings rally a little bit sooner than anticipated. You know, given where valuations are at in the market right now, I mean, the market's at 18 times. That's not a recessionary multiple. So if I was playing this earnings season, I'd actually play it, you know, any way to inject some type of long volatility into your portfolio, especially given where the VIX is at like 16 and 17.
Okay, Rebecca, what about the macro story where we've got a big week of economic data as well? We've got, of course, the first read of the first quarter GDP out this week. That happens on Thursday, and the March PCE index out on Friday. That's the Federal Reserve's favorite inflation reading. We're also looking ahead to the Federal Reserve's meeting next week. The May 2nd and 3rd meeting will likely end with another rate hike. The futures market pricing in an 89% chance for a quarter-point hike, Rebecca. What are you expecting there? And what has this string of rate hikes done for the macro story?
Yeah, I think the macro picture is exactly the opposite of the micro picture that we just heard about the markets, because it's nothing that's stable that I can say from top to bottom, this is the direction. You know, we see that the banks feel that the crisis has been stymied, and therefore maybe we don't need a pause or a pivot like we sort of were thinking maybe in March. The market was starting saying yes. Now the market is reversed course with the manufacturing data that came out of the Empire State last week, some other mixed manufacturing data. I mean, Maria, the macro is just all over, and yet we still have, you know, Project Icebreaker at the Bank of International Settlements. We have now the Unicorn at the IMF. We have Enbridge on the East for the BRICS nations. We have a lot of macro things changing the global monetary system, which I know I've talked to you about directly multiple times, and it is going to have an impact. But as far as next week goes, as far as this week goes, I just expect more data that will again give Jerome Powell more ammunition to be comfortable with another 25 basis point hike next week. And I think he is just worried about any indicators that could send the opposite message, that we do need to pause and we do need to pivot. The market is looking for something that's strong still, and the dollar being strong means that we still continue to hike.
Yeah, we'll see if there's a pivot at some point. Larry McDonald on this program a couple of months ago saying we're going to get a rate cut before July 4th. Great conversation, guys. Thank you. Rebecca Walser and David Wagner joining us this morning with The Word on Wall Street. Have a good Tuesday. Much more ahead this morning.